Welcome to this week's Market Outlook webinar. If you're watching the recorded version, it was held live on Wednesday lunchtime, Wednesday the 31st of August at 12:30 in the afternoon. This is one that happens every week, and it's a look at some of the major currency markets, the major stock market indices, and also the likes of gold and oil to see maybe where the opportunities are in the days ahead. And if ever you can't attend it live, you can always watch the recording. I'll just leave the risk warning up there while I'm talking away. So I'm doing this, of course, with Aondo. My name's David Jones. I've worked in the spread betting and the CFD business for more than 10 years now, and my background is as a technical analyst. So what we're going to look at are sort of trends, chart levels, and maybe where the opportunities may be in the days ahead. Of course, this week on Friday, we've got the non-farm payrolls, I think, haven't we? The US unemployment numbers come out, so that can often mean that we see markets almost just marking time until that data gets released. So we might have something of a maybe an odd couple of days, sort of a quiet couple of days. We'll see how it goes. But let's take a look at what the markets look like at the moment. I think for a change this week, we'll start off with stock markets because I think the FTSE is interesting. Let me just bring this chart up and let's make this full screen. So this is Aondo's Trade Hub trading platform. So I think we all know, what the story for stock markets has been over, what is it now, the last couple of months since the EU referendum vote. We saw a sell-off on results day, and since then they've been in, quite strong recovery modes. But we can see here, looking at the FTSE, the last couple of weeks of the FTSE, this is a daily chart. We've seen the market drift a little bit lower, and we've seen that in the US and also with the German DAX as well. But the assumption is, when we have a strong trend like this, if we do get a bit of a drift going in the market, it should really be an opportunity to buy in, to buy into the next leg higher. And there was a move yesterday. I put something on Twitter yesterday afternoon, but there was a move yesterday on the FTSE that made me think that maybe the FTSE was finding something of a base. So what I flipped it over to here, this is a 4-hour chart. So each of these candles represents 4 hours worth of trade. Let me just put a line on. Here we go. So let's say we're going to take a high-low trend line from the top up here, from those highs middle of August, and we had sort of a move there confirming the trend, move lower, and then it is sort of yesterday we saw the first sort of tentative move through that trend line. We did see one at the end of last week, but you can see this is a 4-hour candle. It didn't even manage to hold above there for the whole 4 hours of the candle. It's very much a spiky move, but we've seen it yesterday. I think it was about 1 o'clock yesterday. It started to move through, and it ended up, giving up some of the gains on the day. But it does make me wonder if, particularly, maybe if we referenced it back to these lows from back here on the way up from early August, around about 67.70, maybe 67.30 or 40 is a better example. But maybe we are getting to the levels where the FTSE thinks about having a look at these old highs again. So I think there's a couple of ways of trading this. I think the aggressive trade. So for me, if someone said, okay, you've got to do a trade on the FTSE, for me the trade will probably be a buyer now at 68.12, based on the fact that yesterday it pushed through the trend line, and it also broke through, I think, the previous day's high. Be a buyer with a stop loss maybe under the most recent low, which is still about, still about 50 points away. 67, 68 is the level. So I think it's an interesting one to watch. I don't think, I'm saying that, I don't think there's any rush maybe to be a buyer of stock market indices, particularly with the payrolls coming up. We could see just a couple of days of quietness. But I think it's interesting down here, after this drift we've had on the FTSE for the last couple of weeks or so, are we seeing maybe something of a base being formed over the last 5 days? And with that push through yesterday, the push through the downtrend, are we seeing a bit of confidence from the buyers coming back in? As ever, only time will tell. But for me, I think it's an interesting one to keep an eye on. For maybe the potential for a turn in the FTSE. Let's have a quick look at the other stock markets while we're on the FTSE. Let's take a look at the DAX, the German 30. I'm assuming it's a similar sort of story. Actually, you could argue, you know, the move we saw yesterday was actually a more stronger move, pointing to a turnaround. Look how the sort of 10,660 area has been a barrier for the DAX. You know, middle of August, pushing up there. Then again, a few days later, and yesterday we did 10,660, sort of taken out by the DAX. So again, that does add, I think, some weight to maybe we're seeing stock markets starting to maybe turn things around again and go gunning back for those highs. If you look at the DAX compared to the FTSE, for me, if I was a buyer on the DAX, I probably want my stop below this low, which is a long way away. I mean, a more aggressive stop, I presume, would be under the low for today, 10,593, which is what? It's about 50 or so points away would be the more aggressive one. But for me, the FTSE 100 seems to be the one that offers maybe the slightly more attractive risk rewards when it comes to trading. But it does look, you know, the move we've seen in the FTSE and the DAX, are we seeing maybe a turnaround in stock markets? Let's have a look at the Dow, just to wrap up the stock market bit of things. Then we'll get onto looking at some currencies. So if we flip it over again to maybe 4-hour candles, you know, it's the same old story. We've seen the Dow drifting slightly, nothing really that drastic. You know, it has been stuck up at these levels for over a month now. You know, something of, you know, quite a wide range from 18,250 up towards sort of the 18,700 area, and it's been drifting off, as you can see. You know, since well, the middle of August, we've seen something of a drift off. And I think maybe the level to watch this afternoon, we've seen some odd moves in the US stock markets this week, but I think there's an obvious level to watch. I think I mentioned before how important I think the previous day's highs and lows are, and we've seen some odd moves. You know, what's the date today? The 31st. So a couple of days ago, that sharp move higher up to 18,525, but didn't take out the previous day's high up at 18,575. Then the market yesterday, you know, slid off, but we didn't really get back to the lows of the day before. So maybe, again, bearing in mind is the payrolls, maybe we'll just see something of a wide range for the US markets over the next couple of days, stuck between those two levels. You know, I think so. We can see. Oh, actually, someone's pointed out RSI divergence on the DAX chart. Thank you for reminding me. We'll go back and look at it because I think it was on the FTSE as well. So let's just finish off with the Dow. So I think maybe, you know, I think the levels to watch. If we get a sell-off, if we get, you know, a sell-off of what, 80 points or so back down to here, it looks good for a bounce. If we get a rally much above, I don't know, 18,500, 18,525, it looks to be maybe a selling opportunity. It's a little bit trapped, I think, at the moment at the Dow. But I never pay attention to oscillators like RSIs, but I was going to mention this today because I think it does add maybe something to the argument for the FTSE. And I think for the DAX, I think as someone was saying there, was it on the 10-hour I saw it? I can't remember. I think it's, you know, when I look at things like RSIs, which is the squiggly line down here, if you're not familiar with it, you know, traditionally on an RSI, it's a relative strength index, so it's measuring how strong is the market compared to how it has been recently. So I'm using here a 10 RSI, so this is an hourly chart, so it's a 10-hour RSI. Traditionally, when the RSI is below 30%, the market is said to be oversold, so it's due a bounce, and when it's above sort of 80%, the market is said to be overbought and is due a rally. But you also get these things called divergences. Let me see if it's going to work on here. Let's just see if we can draw our high-low line. I don't know if it's going to work actually on the RSI itself. No, we can't draw it. So what we're looking at here, if we look at the FTSE, and I'm sure it's the same on the DAX, where we have had a move lower on August 30th, and then a move a little bit lower again today. But you can see, as the market's moved lower, the RSI is almost starting to trend higher. So we've got lower lows on the FTSE and higher lows on the RSI. So that can be a suggestion the weakness in this example, the weakness is running out of steam. So that does add a bit more weight again to our, well, maybe we could see a turn for stock markets up here. We'll see what happens. So, but this sort of pattern here, that's known as bullish divergence. And an example, the flip side of that, it's not maybe the most textbook example in the world, but over here, where the FTSE August 23rd was pushing out to a high and pushed higher still, the RSI pushed to a high and didn't get quite as high next time round. So we had, this is known as bearish divergence and can be a warning that maybe the market's going to run out of steam. That's the perfect time machine trade there to go back and trade it. They're always very easy to spot, of course, when we're looking back on the chart. But here is an example from the here and now, from bullish divergence, that adds a bit of weight to maybe we're seeing something of a turn in stock markets. Let's see what this afternoon brings. But let's talk about currencies now, and then we'll have a quick look at maybe the price of gold and the price of oil. I think there's a lot happening in currencies. Let's talk about the pound against the dollar first of all. So again, I think maybe maybe today, over the last couple of days, we've seen maybe something of a short-term base for the pound against the dollar. But let's take a look. Let's go. Let's go to the 4-hour charts. Let's go to the 4-hour charts. Then maybe we'll zoom in on the last couple of days. So it has been coming off. You know, the pound against the dollar has come off from above the 132.50 level, and it slid back. But I was watching it earlier this week because, you know, I think these levels are still pretty important levels of support. You know, so I was looking at this. Oh, hang on, I've clicked too soon. I forgot to bring my mouse today, so I'm using the touchpad on the laptop, which is always a little bit clunky. Oh, hang on, I'm not even doing that right. But the level I was looking at down here, the sort of 130.20 levels, and yesterday and on Monday it did come down to sort of 130.50. But I'll show you again, if we look at just maybe a 10-minute chart from earlier this week, I do go on about this a little bit, I know, but just to talk about the importance of the previous day's highs and lows. So this is the 31st. This is where we are now. So let's forget about this for a minute. But this was the move on Monday. So the move on Monday brought the pound against the dollar down to 130.60, and then it rallied 60 points into Monday evening. So we saw a move up to sort of 130, 120, and then lo and behold, yesterday, about 8 o'clock yesterday, it came back down, and the same level held. Okay, so again, if you really wanted to be day trading the pounds, or I think any market, you know, one of the things to look out for are the previous day's highs and lows. And as the day went on, the market rallied, but it did stop, and it stopped ahead of Monday's high. And here we are into Wednesday. We've come back. Is that this morning? That's in the very early hours this morning. Come back, not quite got back to that level, but we've had quite the explosive move today. So we've broken through 2 days worth of highs today. So again, it does suggest to me, again, we got with the caveat that it's the payrolls on Friday, we could see something of the start of a move higher, you know, for the pound. If it's broken out through these previous days highs, is this start of a trend higher? So I wouldn't necessarily, you know, be a buyer just now, but I definitely now be looking to buy on any sort of weakness. You know, if we saw a drift for the pound against the US dollar, I don't know, maybe back towards the 130, 100 level, then some support come in, then maybe it looks like a buying opportunity, and I would want my stop under those lows for the week so far. So underneath that sort of 130.50 level, that's the closest I would want my stops at the moment. So we'll see what happens, but I think it's interesting because it has broken, pound against the dollar has broken 2 days of highs this morning. That sharp move just after 9 o'clock this morning. So let's see what happens, but that does suggest to me that maybe it's time to be looking to buy in the dips once again in pound against dollar. We could see something of a recovery. We'll see what happens. Let me just make sure I'm not missing any more questions while I'm jabbering away. Okay, no, that's fine. Right. The other one we looked at last week was dollar yen. So the dollar Japanese yen, and I think it's been an interesting one. But let's flip it over to the bigger picture first of all, because I think we were talking about again the importance of this old support from June. Is that a weekly chart? Let's put it on a daily chart. So the trend dollar yen is undeniably down. So for me as a good trend follower, then what I should be looking for are opportunities to sell dollar yen. So really, I should be sitting on my hands and waiting for a rally in dollar yen back to that downtrend line that we've been following for a while now. There we go. Oh, I've messed that up. That's my fat fingers. Back to that downtrend line, back to that previous resistance. But when we were talking about this last week, I mentioned how important that support could be from June that we can see there. So I think whenever we see a market have, because these are daily candles. Let me see if I can zoom in using my touchpads. Here we go. So whenever I think we see a market have sort of a spiky move lower, it can be, a sign of an area that's good support, and we definitely had that. These are the levels we were looking at. Again, I think, is it the Brexit low? I suppose it is, isn't it? It's the Brexit low. So we had the move on the Brexit down to 99, and it recovered, and it did drift off into July, but it held around about 100s, and then we saw a rally, good rally, 700-point rally off this level. Then the market drifted back. So it would have been, when it would have been about here last week, we were looking at this level again. Just seeing, well, actually no, we didn't do it last week, did we? So it would have been 2 weeks ago, back here. So just seeing how that level performs, and you can see once again, it really has underpinned the slide in dollar yen, and we've seen, quite an aggressive rally off that of 300 points so far. So it does appear to be, if we do get any weakness back towards that 100 level, it looks like a buying opportunity. The question now is it going to change the downtrend? I'm drawing my trend line particularly badly there, so let's just get rid of that. I think for me, the test is going to be if and when it gets back up to the sort of 107, 108 level. So for me at the moment, it looks like, if you look on the hourlies, it's been quite a sharp move in dollar yen. So I'd still be inclined to be a buyer on weakness. You can see the move there that started and moved very quickly. This is an hourly chart. So I'd still be inclined to be a buyer on any weakness for dollar yen. But I think for those who want to maybe sit and wait, the level to watch is on this daily chart, the resistance from July up above 107, so 107, 108. So we'll come back to that, but definitely if it slid back over the next week towards 100, it's going against that major trend, but it looks like potentially, it seems to be a good area to be a buyer. The other one I looked at last week, and it hasn't really, I don't think it's really panned out yet, but it's worth keeping an eye on, I think, in the sort of days ahead, is the Australian dollar, US dollar. So this has been in good trends for the last 3 or 4 months or so. And actually, if we went back a bit better, it has performed. There we go. That's the year so far. So it had, it was on a multi-year low because the Australian economy has really suffered because it's a commodity-driven economy. We all know the last few years commodity prices have crashed because demand from China has slowed down. So the Aussie dollar has been really hit. So this is the Australian dollar, US dollar. It did have a rally earlier this year. It came off, and then it built on another rally again. And I'm sort of thinking that even though it slid, it doesn't necessarily mean that uptrend is over just yet. So for me, I've been sort of watching the Australian dollar to see what happens if it gets back to that old support, which is not a million miles away from where we are now. So for me, I think that the sort of the big level are these lows just ahead of 7,400. So it's still weak. Don't get me wrong. You can see the move yesterday, moving to fresh lows for the down move. But I think it's an interesting one to start to watch to see if we get a move like we saw in the pound today, where suddenly it breaks through the previous day's highs. That for me would be the sign that, okay, maybe we're going to see maybe at least one last Australian dollar push back up towards 77.50. So if you look on the hourlies, I don't think I'd be a buyer just yet, because that still does look weak. But let's see what happens. I think because on the dailies we are still just, well, actually, no, it has fallen below the trend line, but it's not fallen below the last major supports. So for me, these are the big levels to watch. I think the Aussie dollar is an interesting one to see if we get some strength coming in after it dropping, what, a couple of hundred points, and the market pushing back up. So I think that's yeah, one to watch. Aussie dollar. Euro dollar has been pretty boring. I think it really has been fairly uneventful. It's drifting lower. This is a daily chart, but again, I think like the Australian dollar, we had a good trend in the euro against the dollar, and I'm just waiting to see how it's going to react near some of these old support levels. We've got one coming up right now, actually. So you know the lows from when was that? August the 11th, August the 12th. Back then, big levels down here, big support down here. Sort of what was that? 11040, 11070, down at these sort of levels. So I think it's another one for me is where a bit of a sit and wait. I think for euro dollar to see if it suddenly shrugs off this weakness and stages a turnaround. But I think the pound, with the move we've seen this morning, is already signalling that maybe the turnaround is starting. But some of these others, I think we've got to sort of wait and see. Let's have a look at gold, because I think that's an interesting one, because it's back on a big level. So someone saying, can we have a look at the S&P? Yeah, we'll have a look at the S&P in a sec. Let me just bring up gold. Here we go. So I traded this a bit in, when was it? Was it June or July? July, and it took forever to move, but it did eventually go the right way. But I think let's just remind ourselves of the big picture in gold. And we have seen it's been a good year for gold. I think the price is up. Is it something like 25% this year? So we've seen, you know, a rally off these multi-year lows. There's even the argument that it's starting to break out of that, whatever it is, 5-year downtrend in the price of gold. It has broken out this downtrend here from 2013. Has it broken out of that one there? What if we were going to be pedantic? Could we say it was still in that trend? Oh, it's right on it now. So let's see. So we could say that technically it is still in the downtrend, but let's just have a look at the shorter term stuff. Let's have a look at the daily charts, because it's sitting right on a big level. There we go. So on the way up, this sort of sharp move up from May that took it from around about $1,200 an ounce to $1,370 an ounce. You know, we saw a little sell-off on the way that stopped ahead of 1302. The market drifted off and stopped around about 1310, 1313, and it's where we are now. So for me, you know, if you thought the price of gold was going to bounce from somewhere, then this is the place. So an aggressive trade, I don't think I'd necessarily be a buyer today, but an aggressive trade would be to look to be a buyer with the stop under 1300. This is the hourly chart we're looking at, you know, and look at the trend. I mean, that trend is still down. You know, you can see, there we go. But we're back to what had been fairly big levels for the price of gold. So I think that's another one. There's lots of stuff maybe that are sort of watches rather than do's in the next couple of days. And maybe I think when the payrolls is out of the way, we'll have a much better picture, because we will get obviously some moves off that there at 1:30 Friday lunchtime. But I think gold's an interesting one because it's back down at this 1300 level. Let's have a quick look at oil. I don't think we've got much data on crude oil, but let's see what we have. There we go. It's been interesting because this is the daily chart of oil. It's interesting because we've had the slide from the highs, from the $52 a barrel highs in June, and then a turnaround from 40, but it hasn't got anywhere near those old highs, you know. So you could argue that you should be short oil from here, but I'm just not quite sure. I suppose if you look on the hourlies, let's have a look maybe on the 4 hourlies. You know, we can see that the trend, you know, I don't think we have that much intraday data. The trend has been, you know, drifting lower, and it does look like more of a market where we want to sell the rallies rather than buy the dips. So I think it still looks weak, the price of oil, and the real test will be when it gets back to that low on the daily charts, and if it does, if we do see it back down around about $40, $42, you'll be looking to see if it turns around again. But at the moment, it's definitely still weak. Let me have a look at the S&P 500. I don't think I've got that on my watch lists. Let me find it. What do we call it? So just search for 500. But I think it's going to be broadly speaking. There we go. It's going to be a pretty similar outlook to the other stuff. Let's have a look at the 10-minute charts. There we go. So there's our really short-term S&P charts. You know, that similar sort of move to the Dow. Those lows from the end of last week, sharp move higher, and then a sell-off yesterday, but didn't really breach the previous day's lows. So maybe we'll just have a couple of days of chop until the payrolls are out of the way. So I think we'll start wrapping things up there. But I think the markets watch, even though that looks maybe a little bit boring at the moment, I think the FTSE is interesting because of the move yesterday, because of some of that divergence on the charts. Are we seeing maybe a bit more confidence coming back into stock markets? So I think the FTSE is an interesting one to see how it performs. Then of course there's pound against dollar, because it's broken out of the last couple of days highs. It's really respected the support and resistance levels on the chart the last couple of days, and it's broken out on that move today. So I'd be inclined to be a buyer on any weakness. But all of this, of course, is wrapped up with a caveat of those unemployment numbers on Friday. It'd be good when those are out of the way and we can get back to normal. But I think that's it. I think we're done, aren't we, for this week? So as usual, we'll do the whole thing again next week, if I can find the right page. Here we go. We'll do the whole thing again next Wednesday. If you have any questions, feel free to drop me a line. Let me put my details up. There we go. So any questions, you can drop me a line at david@tradeafter.com. I also do a social trading webinar with Eando, talking all about the benefits of social trading, how to manage the risk, all that sort of stuff. I've written some stuff on that. If you go to my website, it's www.tradeafter.com. And you can follow me on Twitter for sort of regular charts, and if levels break, and if stuff looks interesting, and all of that sort of thing. But for now, we will wrap things up for there. Thanks very much for coming along. I hope you have a good couple of days trading until the payrolls come out, and then we'll see where we are this time next week. Thanks again.